Welcome back to the Restaurant Technology Guys podcast. We thank our audience out there for joining us. As I say each and every time, I know you guys have got lots of choices on how you guys spend your time and energy, so we appreciate you guys spending time with us. Today, we are joined by a special guest that's going to educate us on all things restaurant accounting, which is everybody's favorite topic. The sad part is as JT and I were talking prior to the show, like everybody needs it, but oftentimes it's one of those afterthoughts that people don't quite understand the difference in restaurant accounting and how things go. So JT, why don't you introduce yourself to our audience? Let's talk a little bit about who JT is, and then we'll talk a little bit about why JT Pells and the accounting services for restaurants exist, and how they make the world a better place.
Yeah, well, actually, instead of me describing myself, I'll kind of use like what a client told me and what I get a lot, that I'm either their tax angel or tax guardian. And also another client, another accountant actually gave me this. He's a CPA as well. He said that working with you is like everybody's payday, and you deserve $100,000 because we help people save over.
Wow, that's high praise, man.
It's pretty. It is pretty high. I don't know if I would say it myself, but that's what other people say. So if other people say it, it must be true, right?
So help me understand a little bit for our audience that's less familiar with kind of who you are. I know you guys have an accounting firm, your CPA, but is it just kind of your standard CPA firm? Talk a little bit about kind of what it is you guys do, and then we'll talk a little bit about the value of understanding tax and such, especially as it relates to restaurants.
Yeah. So one, I wouldn't say it's a traditional CPA firm. I would say it's more of a tax strategy, tax advisory firm.
Okay.
And what I mean by that, I'm sure you've worked, obviously being in restaurants. A lot of other people that listen to the show, they'll understand this. When you go to your CPA, and the traditional model is you go to your CPA in April 14th at midnight saying, hey, can I file my taxes? And it's a mad rush. And you get this bill. I'm like, what the hell? I owe $10,000. Yep. See you next year. Next guy come in. And it's like ridiculous.
Yep.
I work a little bit differently. So I work with people throughout the year and actually help them save taxes, not just wait until April 15th for me to say, nah, too late. Sorry, man. So like we help people take advantage of strategies, like renting out your home to yourself, tax-free and tax deductible, which is true. Establish your home office, entity status, all the boring stuff. Hopefully I'm not boring you guys with it. But in a short way to say it, we help people actually save money. And generally people save more money than they pay us. And that's when people are very happy. Hence why I get the name Tax Angel.
I would say no doubt. I'll have to put the little tagline underneath your name, Tax Angel.
There we go.
So I guess let's talk about where your history. I mean, talk to me a little bit about how you got into this world. Have you been a tax angel for the last 40 years? For those that are on video, I'm guessing they're going to know that answer is not correct. But talk to me a little bit about your background and history, schooling, those kind of things.
No, for sure. I'll tell everybody my age. I'm 35, so not quite 40 yet, but I've been a tax angel for maybe about 10 years. So once I graduated college, got a job at an accounting firm, and this was not the plan. I did not plan to own my own business. After about 7 or 8 years, I think, I actually got fired from my firm because I was doing some bookkeeping and accounting on the side. And my firm said, you can't do that. That's competing interest. You're done. And I was like, oh, shit. Like, I guess I'm out of a job. So my original thought was I was like, oh, I'll go get another job. And then my thinking was, well, I can't get another job because I just got fired from being insubordinate. Nobody's going to hire me. And then basically I said, well, I got to go out and get clients, hustled, did everything, Facebook marketing, all that stuff. And then now I'm here, and I think we have like over 170 clients or something like that.
That's
and
amazing.
That was only 2 years. That was, what was that, 2 years ago about? So, or no, 2.5. So March 2021, right in the middle of pandemic. And I just got a new girlfriend who is now my fiance. And I thought, oh boy, this isn't good. But she supported me the whole way, and she's been nothing but encouraging.
That's very cool. I always love those entrepreneurial stories where people, out of necessity kind of figure it out. And why restaurants, I guess. Talk to me a little bit about kind of the restaurant gig and why have you found success or, I even focused on restaurants?
I think a lot of it, one is kind of the same thing. They kind of came to me. This wasn't like anything I sought out and said, oh, I need to help restaurants. I don't my family didn't own restaurants. I like eating at them. So I don't come from that world. But I found a lot of restaurant owners are actually, as I call it, treasure trove of tax deductions and tax credits, but nobody helps them take advantage of it. So, for example, I see you writing some stuff down. You're going to love this one.
I cannot wait to dig into some of the details because our audience is going to eat this stuff up, JT. Like I can feel it, and I talk to a lot of our listeners that are like, dude, that episode with XYZ was amazing. So I'm
Yeah.
excited about it. So yes, tell me more.
No, for sure. Yeah. So I just found that a lot of restaurants don't take advantage of tax deductions. They normally just get their POS system, whether it's Square, Toast, Aloha, there's all of them are out there. I can't name all of them. They would basically just print it out, say year to date, go to their accountant and say, okay, this is what I made. Give your W-2s. And like, that's the least accurate way. And whenever I would talk to these clients, I say, hey, are you doing the FICA tip credit, which you basically get a tax deduction on steroids for having tipped employees? They're like, no, I'm not. Oh, well, I see here you brew your own beer. Are you taking advantage of, it's what's called a research credit, where you can basically, it's a tax deduction on steroids. That's the way I explain it. And they're like, no, I'm not. Because I noticed that you brew your own beer. They're like, yeah, we do it all the time. Oh, okay. Well, let me just help you save another $15,000 in taxes. You're renting your home to yourself. And there were just all these things that most restaurant owners weren't taking advantage of. And this is just my opinion. I've never asked a restaurant owner or restaurant manager this question because it's kind of an odd one to ask, but I'll ask you. You'll know it. Is that I find that most restaurant owners, like, they're willing to invest in an accountant when they know that somebody cares. And I think a lot of it is, especially in the virtual world today, everybody's on their phone, everybody's working from a computer. So like, I could just do QuickBooks. I'm already physically sitting down. It's just one link. But if you're running a restaurant, you're on your feet. You're serving people. You're checking clients. You're checking on customers. You're putting out literal fires and figurative fires. So you're like, oh, like I just need to I could just entrust in somebody. But it is hard to find that person that will actually sit down and help you. Would you say that's true?
I would fully agree with that. And I think all too often, I mean, part of where the show comes from is just to help restaurant owners. I mean,
Yeah.
I have been in this industry for 25 years. I am too, I'm 35. No, I'm teasing, a little bit older than you, but I've been in this industry for over 25 years. And I started the show truly to help restaurant owners because they oftentimes have 1,000 different things competing for their time and energy.
Oh, yeah.
And they recognize they have to pay taxes. So they have to have an accountant and they have to run their reports and make sure that they submit them, or they're going to get in trouble with the government, whether it's a sole proprietor or they've got they've got an entity and they've got to do business taxes. They have to do it. But it oftentimes comes at the expense of potentially hiring a new person or coming out with a new menu or some of those kind of things. So it comes as a last resort, and the dates come up no different than you said, April 14th. They go, I gotta go do this. And so in that, I guess, part of the advantage, and I love that you talk about it, JT, is that the fact that you've uncovered some of these things that are often overlooked in
100%.
the restaurant industry. So let's dig in a little bit about the tip credit and why people either aren't aware of it and they don't ever take advantage of it. As you're going through these conversations with people, tips are a necessary part of a lot of businesses, especially in table service. Even in counter service is becoming more and more prevalent. But talk to me a little bit about what is the tip credit and why do people not exercise it? Why do their accountants that they are already having to do the books not even consider that?
I think it's a few things. One, I think most we'll go back to the example of April 14th at midnight, right? If you're waiting till, the midnight hour, the 25th hour, you just, as an accountant, you can't think of everything. You can't be like, your main thing is, let me get this filed, not let me get this extra stuff in. So I think that's one. I think two, it's most restaurant owners, right? You yourself, your job is to make money, right? You want to make money. You want to provide for your family. You want to help the community out. The last thing on your mind is, let me take advantage of these tip credits, right? That's the last thing. So I think it's one, not knowing. And I think two, a lot of accountants, and I hate to say this because I kind of grew up in this world, and I think a lot of it is they're not lazy. That's not the right word. They're just not going to go the extra mile.
They don't understand the different industries, I think.
It's that. And I think it's like any industry, right? Like when you have a car that breaks down, like there's not some rule that says every car is going to break down May 1st. Like that's just like, it's not going to happen. But like with accountants, everybody's looking for their guy April 15th. So it's just that long line. But about the tip credit, kind of what it is, if you're a restaurant or any industry, but we'll focus on restaurants specifically, obviously, because we're on here, is if you pay a tipped employee and you report their tips on their W-2 on their check, you actually get a tax credit at the end of the year. Now, I'm not going to go specifically what exactly a tax credit is, but just know this. It's a tax deduction. The way I'd explain it, it's a tax deduction on steroids, basically. When you spend $1, a tax deduction is like you save 10 cents. It's basically inverse. When you spend $1, you save 90 cents. So it's basically, 9 times as good. That's the way I would look at it. And yeah, if you're paying your employees, your bartenders, your waiters, your waitresses, your busboys, whoever it is, servers, and you're reporting those tips, your payroll provider should be able to provide a report to you that says, hey, your tip credit is X. And I'll give you an example. I have a restaurant client that opened, I think 4 days a week. They're open Thursday to Sunday, only for the dinner crowd. So I think from like 4 to 10 or 4 to 11. And, they make about, I'd say, million two in gross revenue, not including what takes home. And their accountant was missing like, I want to say it was like a $10,000 credit, which is huge.
Yeah,
they were just
enormous.
Flat out, regardless, there were other stuff they weren't doing, but I was like, hey, are you guys doing this? I noticed you have tipped employees. They're like, I don't think so. And I did their return this year. It went from like 25,000, I think, down to like 5. And they made the same amount of money. There were some other things that we did, but just from knowing that, and I think that is just most people don't know. Most, like you said, most accountants don't specialize, and most business owners don't even know it exists.
That's amazing. I mean, that's amazing because quite frankly, I've been in this industry for 25 years. I'd never heard of it. I've heard of tip credits where you don't have to pay full minimum wage in certain states. And the tips have to make up at least a minimum wage, but I'd never heard of a tax credit for it. So the fact that I'm in this industry, I'd never even had any idea that was something that was applicable to our audience. So that's amazing. You talked about the research credit. Talk to me a little bit about the research credit. Brewing your own beer, making your own kombucha, making your own wine, whatever those things might be. Talk to me a little bit. What is that? And I run a software company and we take R&D credits all the time. So I'm assuming it's something similar, but talk to me a little bit about that, because that's also something I am pretty certain that most of our audience is not taking advantage of.
I'm pretty sure. I shouldn't say I've never seen anybody not do it that wasn't working with me, but it's very rare. I'll say that. So it's very similar to the software company. So the IRS, years ago, they said that if you are building your own product services, you get to take advantage of a tax credit. It's been around for years. I'm pretty sure it's going to be permanent. It's not going anywhere. So if you were a restaurant, if you're making your own kombucha, if you're brewing your own coffee, beer, if you have a restaurant and you need to make a new menu, that counts. So if you're making new items, and again, it just has to be new to you. It doesn't have to be new to the world, right? Doesn't have to be new to the
beer,
world.
There's some breweries in Belgium that have been around since whatever 1300s.
Whatever it was.
Yeah.
So if you're brewing your own beer and let's say you pay a brewer full time to brew beer. Again, I'm simplifying the version, but if that's all his job is to test new samples, test recurring ones, improve them, and you pay him $100,000 a year, normally your tax rate, you'd maybe save $20,000 in taxes for that. If that's his case, you'd save like $80,000 to $90,000.
That's
and amazing. The reason why I like these credits is you're not inherently changing the way you do things, right? Because I'm sure you've been in this a long time. You have to be an S corp, a C corp, a partnership. All these that requires a big change, right? You have to do a payroll. You have to now if you're a C corp, you can't take there's all these rules that you have to inherently change. With the credits, you're literally not changing anything. Your accountant's going to ask you some questions, some yes no. We have a whole process. It's a yes no answer, and if you do, we just look at your books and then we can retroactively go back and fix it. And the nice thing is, there's so many restaurant clients that are probably not taking advantage of this. If you had tipped employees in 2020, 2021, 2022, we can actually go back and get you that money back.
Yeah, that's one of the things that that we actually did a little bit, even in some of the R&D credits. We went to a different CPA firm and we're able to go back and get restated tax returns, and it was pretty amazing, on the tip credit side and on the research side. So, do you have any success stories that you would want to share with our audience that you're like, oh, we went back 2 or 3 years and ended up getting people either a fat check or a big credit towards next year's taxes?
Yeah, there's actually the one that's open 4 days a week. So they're out here in the Midwest. We went back and they had some tip credits. I think one was for 10. It was 10, 12, and I think 2020 was a little bit lower because, obviously people weren't working as much. I don't remember off the top of my head, but I remember I think they ended up getting back like $30,000 in checks or something. I can't remember the number exactly, but they were like, wow, we're never leaving you. And then we also helped them apply for the ERC credit. So they got back
that was really where I was going next is we got a lot in the way of ERC credits. So talk to me a little bit about, because it feels like that's one of the most untapped resources that restaurants should have used. And because it was, I can tell you that the amount of effort that we went through as a business was pretty significant because the government didn't make it easy back when we applied for it years ago. But it seems like it's both gotten easier and there's still money available. Talk to me a little bit. What is the ERC credit and, and why should restaurants consider applying for it?
The reason number one is that if you're a restaurant, you're most likely going to qualify. As long as you stayed open and kept people on payroll between 2020 or basically April of 2020 to September of 2021, so about 6 quarters, so basically a year and a half, give or take, you can get a straight refund, straight cash, back to you for keeping those people on, as long as they're W-2 employees and they're not foreign. You actually get a credit. I think it's up to $26,000 per person. So I had one client, I want to say they have like, I think they have like 30 people on payroll. And I mean, they ended up getting back like, I don't know, $400,000 or $500,000, whatever the math came out to be. And they were so happy. And the reason I think why a lot of restaurants, like one, like you said, it is cumbersome. It is, I'm not going to lie, it is cumbersome.
It takes a lot of work.
Sit here.
You got to go back and get records of stuff that you don't really want to have to deal with.
Get W-2s, time logs, payroll returns, all that stuff. And the nice thing is, if you work with me, like I help you do it. Like I'm going to tell you exactly what to get. I'm not just going to give you a list and be like, all right, go home and do homework. It's like, no, we're going to sit on the phone. We're going to sit on Zoom and I will hold your hand and say, give me this form. No. Share your screen with me. Click here, click this. I will sit right there with you and do it. Or somebody else on my team will. And then I think it's cumbersome. And I think the other one is that people are listening to like TikTok videos, accountants giving just general advice. So the reason why most restaurant owners or restaurants will qualify is, number one, the first test is you had to have a drop in revenue, which
so
some restaurants have
gone down, which I guarantee you haven't.
Yeah, most did. And then another thing too is if your business was affected or impacted, if you were shut down by a government, whether it was the city, the state, the feds, whoever, if you had to shut down, you're going to qualify. And then another one too, which a lot of people don't know, is if your logistics got interrupted. So for example, a lot of my restaurant clients, like they actually had to they bought meat and stored it in a deep freezer. So they're like, I don't know if it's going up. There's logistic or supply chains. If your supply chain got disrupted, you would qualify. So just right there, I can't think of a restaurant that stayed open that didn't have one of those three. I can't think of one.
And obviously there's some that did better than others. We have some restaurants that, but many of them really, really struggled. You also brought up, JT, the home rental credit. That one seems like a little bit of a different approach. Talk to me a little bit about kind of that strategy and why you guys are considering taking that one.
No, so we love it. Every restaurant owner, if you own a home, a personal residence, if you own a personal residence and you own a business, you can actually rent your home to your business 14 times per year, tax-free. So I think all the listeners are going to be like, wait a minute, I own a home, I have a business, and you're telling me I can get tax-free income? Who doesn't like that, right?
Yeah. I'm gonna say, so, I might be looking that up, even though I don't own a restaurant. Figure out how to. I own a business.
This could be any business. The reason why I like restaurants is typically for this to work, you have to have a place of business, which obviously everybody does, and then you have to have a home resident. If you're working out of the home, it gets a little wonky. Or solely out of the home, it gets wonky. But a very easy way for restaurant owners to do this, I'll show you how one of my friends and clients, how he does it. He's an accountant, but it's the same thing. So if a restaurant hosts an event at your own home, it could be, like a team party, it could be a shareholder meeting, it could be a networking event. So the way one of my friends does it, he's another accountant. He has a poker night once a month with some of his accounting friends. I've been to it a few times. Basically, we just kind of go shoot the shit, drink, have a good time. We talk about work, obviously, but it's probably about 50% work, 50% fun. He rents his house to his business to have an accounting network event. So restaurants could do the same thing. Here's another easy way for restaurants could do it. You've been in this a long time. A lot of restaurant owners have partners, right? Yep. Whether it's your friend, your brother, or somebody else, right?
Yeah.
Every month you have a set time and you say, hey, once a month on the 5th, we're going to meet at my house or your house, have our monthly board meeting or team meeting, and we're going to go over the financials. You're going to do that anyway. You could do it at the restaurant or
do it at the house.
Do it at home.
Pop a bottle of wine and hang out.
Yeah. You're going to pay yourself anyway, right? So the business gets a write-off for a rent expense or meeting expense. And then you as the owner of the house, you don't have to pick up that income. So it's all tax-free income.
I'd say it's, and I'm certain, you obviously are CPA. You talked about it earlier in the show. There's lots of these things. Are there anything else that's kind of sticks out in your mind that people aren't taking advantage of before we dig into some things that, quite frankly, I'm curious about, because I've got a couple of things that are pure tax-related questions that we've had some restaurants ask about. But is there any other kind of advantages to different strategies that you've been able to use that you see underutilized within the brands?
I mean, there's a ton. I mean, I'm sure we'll jump into it, but One, I think that people love, and this is across industries, but restaurant, it works really, really well. Hiring your kids. Now, what do I mean by that, right? If you can hire your kids, I mean, I'm sure you've been in, so many owners have had their kids, like their bus boys,
Yep.
their hosts, their whatever. If you pay your child out of the business, you can actually it's called income shifting. So they're in a lower tax bracket. If they're paid under 13,000 a year, which is probably pretty easy for a 15-year-old kid to get, if you pay them, that's a tax deduction for your business. It goes into their bank account untaxed because they're under that standard deduction. So that's one. And you might think you can do this literally from the time they're born to the time they go to high school. So like if you have a newborn, right? You put a restaurant onesie on them, say, hey, come to our family restaurant, whatever, right? You can pay them to be a model.
Post on Instagram now they're working for your business.
Instagram, yep. Here's another one. If they're younger, taste testers. It's a real job. Look it up. You can have your kids who are 4 and 5 taste the kids menu and be like, oh, Dad, I don't like this. This tastes bad, or this tastes good. You pay them to be your taste tester, and now if you can pay them up to 13,000 a year for 17 years, tax free, tax deductible.
Quite frankly, that's paying for college, especially if you invest it properly.
For college. It's paying for college. It's paying for their retirement. It's literally whatever it is that you want, all because you just took some time to invest in a CPA that's going to help you, not somebody that you're going to on March 15th. Because again, if you guys want to do this, which all the listeners are all serious business owners, these are things that you're doing like now. You're doing them 6 months ago. You can't come to me Christmas like, hey JT, can we do those 55 things that we're on with the RTG guys? No.
Yeah.
No, sorry, man. It's Hanukkah. I'm out.
That's funny. So I'm a little bit inquisitive about taxation as it relates to products, because we've had a lot of customers that struggle with how to tax items. Different states have different things. Have you dealt with any of that? I know you're really on the business side, but have you had to deal with, prepared foods, unprepared foods? Different states have any of those kind of things. Do you give any advice to your restaurant tours on those fronts?
I would say this is, again, every state's different, and I'm sure like I'm going to say something that maybe like in South Dakota it's different, or like, well, in Iowa it's this way. It's like, so I'm going to give kind of some general advice in terms of like prepared and unprepared foods is, are you changing the original shape of the food? So for example, I have a client, they own a cafe out in California. A lot of their stuff isn't reheated. They basically just buy it from their suppliers, and it's
like in a clamshell and put it in the cold case.
Yep. So it's all cold. They don't warm it up. They don't pay taxes on that. They've been through an audit, and the state of California is like, yeah, like you guys don't owe any taxes. Now the key is like when you change the shape of it. Now what does that mean? If you heat it up, if you toast it, if you're frying it, and even if it's cold. So cold food doesn't mean that, right? Because if you're getting ingredients like like a Subway sandwich, that's definitely taxable because you're changing the shape of the bread, you're putting tomatoes on. But if it comes prepackaged, that's generally not taxable. Again, I'm sure each state is going to have its different nuances, but I would say that's a very good rule of thumb is if you're changing the form, no sales tax. If you're changing it, sales tax. That's kind of a good rule of thumb.
Another tax-related question, and again, these are questions that I get from our listeners, is third-party delivery and first-party delivery. How do you deal with any of it? I mean, it's impossible to figure out how to tax those things. How do you advise your clients on those things?
Oh, like DoorDash, Uber Eats,
DoorDash and Grubhub and Uber Eats, they're collecting tax on your behalf. Are you supposed to tax them? Are you not supposed to tax them? What do you deal with any and all of those things? I guess it's something that I continue to get asked is how do you reconcile those things from an accounting level?
It's a gray area because those are all relatively new. So there's not a lot of like IRS guidance on that.
Okay.
The way that I tell people is, if you're paying it, if you're even if Uber Eats is delivering it, typically you should be charging sales tax because you kind of want to think of it as like
you're selling it to a regular consumer,
exactly. It's just Uber Eats happens to be like your Square, right? Like when somebody swipes a card, if you have a Square POS, right? Like technically Square is delivering the funds to you. It's the same thing.
Okay.
So I would say that you should be charging sales tax if they walk into your restaurant.
Got you. Okay. And then the last question, just again, and you're probably like, what the heck? How did I get on the show? And now I'm talking about all these random things, but these are real things that people ask is, we talked about prepared foods. There's tools out there that continue to get plugged into POSs. Avalara is one that I've seen advertised quite a bit. Are you familiar with Avalara? And they've also got somebody that was previously on the show, Davo, which does
Mhm.
tax remittance, sales tax
Yep.
remittance. But
Mhm.
as far as even calculating cross state lines and where was the product sold, where was the product,
Mhm.
produced, all of those kind of things. Have you had to deal with any of those pieces?
Not too many, because most
Okay.
of the restaurants, right, like where you're selling is like your typical. If you're like, where I'll use Iowa as an example. Like I have a brick and mortar restaurant, or sorry, they're in Wisconsin. They're typically not like delivering stuff to like Minnesota. It's just like
Yeah, it
not going to
doesn't
really
happen that
happen.
often.
So most of the time, it's really just like single entity, like in the state, in the county, in the city. And then I actually want to hit on something you talked about, like, oh, these are embarrassing questions. That's actually one thing I probably should have said earlier. I always tell clients, and when I first meet them, I always say, guys, please ask me every single question. Do not feel embarrassed. I went to school for this, you didn't. And if you have to ask me a question 15 times, that's on me, because that means I'm not explaining it. I'm saying something where it's not meaning. So I have to figure out how to translate it to you. Don't ever feel like you have to translate it for me. So I
Well,
always
I
tell people
appreciate
that.
you because again, they ask me questions. I'm like, I'm the
Yeah,
POS guy. I'm the restaurant technology guy. Like, I have no idea. Go call
yeah,
your accountant. So now we've got an
yeah.
accountant on the on the line.
There you
So
go.
I'm gonna ask
Yeah,
you because these are the
there you
kind of
go.
questions that these guys
Mhm.
come up with. Um, the last piece that I really is related to I guess personal income and business income. Again, I know at times restaurants, and it's a pretty old business. A lot of times people will run
Yeah,
some of their expenses through the business, their wine
yeah,
clubs and those kind of things. Talk to me about how you segregate those things, because I think it's
mhm,
just, again, one of those things that I've seen restaurateurs struggle with because they don't
yeah,
understand how to balance that. And I guess
mhm,
I'd love a little bit of free advice for our audience out there,
yeah,
that can help. How do you segregate those things? How do you
yeah,
build the firewalls to ensure that you're
mhm,
doing it properly, but you're also living on the line, that you're being legal, but you're
mhm,
maximizing your benefits?
yeah. No, exactly. I always tell people, and this is regardless of business, but for restaurateurs, what I always try to tell people is, and this is why they like us, is try to make it easy, is whatever's business is business, whatever's personal is personal. I know that sounds simple, or it might sound counterintuitive, but it's if you can, like, let's say some of your wine club, right? Let's say you have a restaurant, right, and you have a wine club that
Uh-huh.
you admit to. Some of it's personal, some of it's business. I would say that you could throw, not even say I would, I do today, this, you could put that on the business card, because, and you want to have separate cards for business. So that means if you're purchasing inventory, it goes on this business card.
Yep.
Make it, put a sticker that says business on there, so something like that. And then and that way in your head, it's like, is this a legitimate business expense, or is this personal? If it's all personal, personal card. If it's all business, business card. So the way we run things here, and the way I tell our clients is, you have one business checking account, one business savings account, one business credit card. Make it super simple. And then, like I said, if you can tie a business reason to it, like the wine club, hey, if you're going to put some bottles in your place, if you're doing research, business card.
Yep.
If it's truly like Netflix at your home, probably personal.
Yeah,
So that's
exactly.
that's kind of how I would
Probably
do
not
it.
running Netflix up on 40 TVs in your
Exactly.
bar. So,
Exactly. Yeah.
a couple other mistakes from a
Mhm.
tax benefit perspective that I've seen restaurants do, or restaurant owners do,
Mhm.
is they pay themselves too much. They don't take it out in the
Yeah.
form of distribution. So talk to me a little
Yep.
bit about tax bracketing and
Mhm.
understanding what your income should look like, and how you might take
Mhm.
distributions from your business if you're a sole proprietor, you don't have a partnership.
Right.
Yeah, but I think it's, again, I know
Mhm.
it's a silly question, but I think people, oh, I need this
No.
kind of income, so I'm going to pay myself this, versus paying themselves what is market
Yeah.
rate, and then taking a distribution because it comes
Mhm.
out differently, and your tax
Yeah.
brackets are different, and your income tax on a personal level is different.
Mhm. Yeah. I actually love that you asked that question, because you hear so many. It's like, oh, take 30%, do this, do that, and it's just this very confusing thing. So I actually asked. I learned this from a mentor. His name's Cameron. So if he sees this, he'll know who he is. Um, I tell people, and one of the first questions I ask new clients when they're determining payroll, something like that, I say, what do you need to live every day? Like, what's your mortgage? How much do your kids go to private school? Do you, like, I want to get real personal, because I need to find out the best advantage. And if, let's say, Jeremy, you come to me and say, JT, I need $8,000 to live every single month. That's what I need. My mortgage, my kids, my wife, my cars. I need $8,000. Say, cool, Jeremy. Here's what we're gonna do. You're going to take, so if you need $8,000, you're going to take a $4,000 distribution every single month. It's going to be the 31st every single month. There's no negotiation. It's the last day every single month. And then the other half of that 4,000, you're going to take a $4,000 net take home check. Go to your W-2 provider. I can do it for you, and say, hey, I need to take home $4,000.
Yep.
So now it's a very easy way. Now, the accountant in me would say, no, you should be tracking it all year. But I realize you're a business owner. You're trying to make money. You don't have time to sit there and be like, wait, is it 35% this month? Is it 40%? So again, take what you need. Half is distribution, half is payroll, and you're going to end up getting that market rate. I found that works out more times than not.
Well, and I think I mean, oftentimes I know, because I've got mentors that have talked to me about this. It's like taking it out that way. Oftentimes as distribution, you're not getting taxed and you don't get bumped into certain tax brackets. And it's more tax efficient to do it that way. And so I appreciate you answering that. You're going to get from our audience, how do you know how to do restaurants, and how do you deal? I mean, you talked about the number of clients you guys had. You talked about Minnesota. You talked about Wisconsin. You talked about Iowa. Can you work it? And you talked about a client in California. I know we talked about this pre-show, but you're going to have people that go, why should I work with some guy out of the Midwest that's going to do tax accounting? I'm in New York. I'm in California. How the heck is he going to know what to do there? Talk to me a little bit about how you would combat that conversation if it came up to you.
Yeah. Well, number one question I ask people is like, why are you talking to me? Clearly you're unhappy with your current situation. Otherwise, because believe it or not, I don't go out and poach people. I don't go on Facebook and, hey, are you happy with your account? Yeah, cool. Jump. I don't do that. I do it by attraction. Everybody comes to me. So for them, I'd say, if you're coming to me from New York, like, what can you do? I'd say, well, are you happy with the amount of your taxes? And one thing why clients love us, I generally ask people for their last tax return. And I'm pretty good at being able to pick out about $30,000 to $40,000 that most people miss. So if you're happy missing $30,000, $40,000 because you have a local guy in New York and California and wherever you are, cool, stay there. But if you actually want somebody to proactively look, and like we said about the FICA tip credit, you've been doing restaurants, you're like, I've never thought about that. So if you want to keep missing those, cool. But if you want to come with me, come be the tax angel, then that's what I would say. Because like I said, I'm pretty good at being able to look at your return and be like, yeah, we're missing some things here.
Yeah, I think that's amazing. And I know that, again, you and I talked about it pre-show. You've got the ability to work in all 50 states. And so do you deal with brands, I guess, in general that go across multiple states? Have you dealt with that yet? Where they've got 4 different properties, one in Wisconsin, one in Minnesota, one in, Iowa. You're able to deal with all of those kind of things?
Yep. Yeah. Okay. If you have restaurants in all states, as long as you have separate POSs and you can divvy up
the data. Yeah.
Because that's pretty much it. It's where you work is where you can't like say, well, I have this restaurant in Texas, or that's a bad example. I have this restaurant in California where I have to pay 13% state taxes. Can we just say it's in Texas? No, that's fraud. We can't do that.
That doesn't work. Yeah. That doesn't work. I mean, it probably works for a short period of time, but somebody's going to show up and knock on your door and go, yeah, not anymore.
Yeah. I always tell people I'm actually the most conservative accountant. I'm just looking in the Internal Revenue Code. Like the tip credit, that's in the tax code. The R&D credit, that's the tax code. The Augusta rule with the home, that's right in the tax code. So I'm just following that. I don't go out of it. And if I've had people, who my partner Drew, who you guys, or he won't be on this, but you talk to him. I mean, I've turned to him before and looked at him like, we're not working with them. Like they seem shady. I'm not doing that. So but we can work in all 50 states. Most states, the CPA license is reciprocal, meaning that if you're a CPA in California, you're going to be a CPA in Iowa. You just have to pay the $50 fee or whatever it is.
Yeah. And I do tell a story from my very, very early days. Like I was a teenager where we had a customer say, well, how do I ring stuff into the POS without the government knowing about it? I'm like, you probably don't need our POS. You should probably go find somebody else that's going to be be able to teach you how to cheat the government. Cause that's not the way that No.
The same way. Like when people do I have to report cash? I'm like, yeah. Like, well, how would you know if I don't tell you? Be like, you're telling me right now you don't do that. So exactly. No, you have to report it. I'm going to report it. It goes through in your POS, so I'm reporting it.
Yeah.
So,
good luck. And oftentimes there's actually a product that we used to sell back when I was still in high school that ultimately got shut down because somebody went in and they had a 2020 type reporter come in and he was posing to be a restaurateur, show me how to cheat the system. And the technology provider ended up getting shut down. Fortunately, that company's out of business and we don't deal with them anymore. But it is a pretty common thing that we get from restaurants where it's like, how do I cheat the government? It's like, go buy something else because it's not going to happen.
You don't. Yeah. Oh yeah. I've told people not doing that.
Yeah. Sorry. I love it. So I guess JT, what would next steps look like if somebody wants to engage with you? How do they get connected? How do they deal with I guess what would you suggest that they go look up? Because it sounds like it's a pretty no risk offer that you're putting out there. Give me your tax return. Let me go look at it. And if I can help you, I will. And if not, then go back and do what you're doing.
Yeah. No, so the easiest way, I know you guys are going to put a link. It's a link to our email list, jtpells.com/RTG. The link's going to be in the video. It's going to be the description of all of these. And when you sign up for that, that's actually sign up for our email list. And then all of our listeners today that listen to this episode right now, in the future, whenever it is, you're going to get a restaurant owner's tax savings cheat sheet. It's going to show you how to write off your home office, pick the right entity, your miles, your car, all that fun stuff. And that's all free. And then once you're on that, you're on our email list. And then after like 3 or 4 emails, you're like, wow, this is gold. I need to talk to him. And I think like every 5th or 7th email, there's a call to action that says, hey, if you like what we're saying, go ahead and book a call. And then once you get on that, like I said, there's going to be some questions on there. You upload a copy of return. You black out all your private information. I don't care what your name is. I don't care where you live, your address, all that stuff. I just need to see real hard numbers. And the reason is you guys get the best out of it. And then by the time you go through that intro call, you're going to be like, wow, I've never had a tax accountant on the first call say he could save me like $50,000. It does happen.
Well, and I think it's amazing because and as silly as it sounds, all too often we get comfortable with the people that we've been doing business with. And I mean, I talked about the ERC credit even for our own business. And years ago, we had a CPA and nice enough guy, and he took us out to dinner once a quarter and all of that. But we changed CFOs, and our CFO's like, this guy's not doing his job. We went and found another CPA, and you know, we ended up getting 3 or 4 points more to the bottom line within our own business because of finding a CPA that was focused on our business and was really focused on understanding the IRS tax laws and the state tax laws to be able to maximize those things. It was huge. It was really, really huge. So I know that's out there. I've got to ask just because I know our audience may hit me up on social. What does JT stand for? Where's the name come from?
There's one name I give, but it's a joking one, Jamal Thomas, but it really is Joshua to carry Pells.
Okay.
That's what the initial stood for. I've been calling myself as far as I know, as long as I can think. My mom doesn't call me or calls me JT, so nobody calls me by my government name. I won't give that out because, that you got to pay for. It is on the return, so that you got to pay for.
Perfect. Well, JT, I appreciate you dropping as much knowledge as you have. I'm excited for our listeners to get this episode in their hands because I think there's a lot that you can do. And I know we just scratched the surface on all of the things that you can do to help our listeners out. And so, guys, again, link will be in the description. Link will be up on the website to go download that white paper, help with tax strategies. To our listeners who haven't already subscribed to our newsletter, the RTG newsletter, please do so. You guys subscribe to the newsletter once a month. You will get an email with all of the episodes. JT, you can give Drew a hard time that you got to be the star this time. Maybe we'll make him come on the next episode and do all the talking.
Yeah, we'll have to do that. For everybody that knows, that's my business partner, Drew. He's the one that puts together the email list, the emails. So all the non-accounting stuff he does. I do all the accounting stuff.
I love it. I love it. And to our listeners, guys, I know that you guys have got lots of choices, as I said on the onset. And so we appreciate you guys listening. JT, thank you so much. And to our listeners, make it a great day.